faster than the debt, and it has to do that for an extended period of time. That's how countries get back to a sustainable path.
And to be mindful of their spending when the economy is growing. Thank you so much. I yield back my time.
Thank you, gentlelady, for yielding back. The chair now recognizes Mr. Raskin for 5 minutes.
Thank you so much, Mr. Chairman. I'm sorry that you were harangued again this morning about the origins of the coronavirus. I'm very eager also for the House Committee on Science to take up this scientific question and also deal with the fact that I have emphasized since the beginning that Donald Trump repeatedly defended the performance of the Chinese Communist Party and General Xi in COVID-19 in February, in March, in April, and May. For many months, I think on 19 different occasions, he defended them as doing a great job and a wonderful job and praising their partnership. So I'm very eager to get to the bottom of it, regardless of whether the virus came out negligently, recklessly, or deliberately. None of it excuses the lethal recklessness of Donald Trump in his complete mismanagement of the coronavirus in our country. And of course, we lost hundreds of thousands of people before he left office, and we got organized to crush the disease finally. Mr. Chairman, welcome to our committee. I was taken with something that you said in February when you said, what it takes to drive productive capacity to raise living standards over time is investment in people's skills and aptitudes, investment in plant and equipment, investment in software. Do you agree that investing in our nation's infrastructure will increase our productive capacity and contribute to long-term economic growth in the country?
Mr. Raskin, I want to start by saying that I don't want to be seen to be addressing any particular legislative proposal, but I think it's basic economics that productivity is what and demographics are what drive longer-term growth in a country. And one of the big ways to affect productivity is through investment, and that includes infrastructure, includes plant and equipment, in people, education, skills, things like that. So I think that is a point that I was making back in February.
Gotcha. Well, let me take a specific example then, and maybe you can help me with it. 30 million Americans live in areas with inadequate broadband, which severely limits their abilities to do their work, to develop their businesses, to participate equally in school. I've had high school kids tell me they have to go to McDonald's or Starbucks in order to get internet that they can use for their assignments. The American Jobs Plan would make unprecedented investments to expand broadband to these rural communities like Frederick and Carroll County in my district. And I know that you don't comment on specific legislative proposals, but would you say that in general, expanding high-speed broadband access to millions of Americans who don't have it, especially in rural areas, would create new economic opportunities and potential for long-term economic growth?
Again, without commenting on particular legislation, I think I would look at broadband like that in the same way that prior generations looked at electricity. If kids don't have access to the internet and to basically all the knowledge that's available through that, they're not going to be able to maximize their potential or realize their potential in this economy.
Well, I mean, that's a fascinating answer to me, because when I tried to look at it historically, it seemed like the definition of infrastructure has expanded over time. And, you know, when Eisenhower said, let's build the highways, people said, what's that got to do with infrastructure? Infrastructure is bridges. And, you know, when President Lincoln did the land grants to do university and colleges across the country, people said, what's that got to do with infrastructure? And so it does seem like the definition of infrastructure changes. What is your working definition of infrastructure as an economic concept?
I hadn't taken the trouble to really write one down, and I wouldn't like to do it in real time here, if I can avoid that.
Okay, well, or let me just pose it then in kind of a more abstract way. Would you say that infrastructure is anything that allows for the expansion of productive capacity and contribution to long-term economic growth? I
don't see anything objectionable about that.
Yeah. All All right, well, I just very much appreciate your emphasis on investment, because that's what we've been doing with the American Rescue Plan. That's what we want to do with the American Families Plan. It's what we want to do with the American Jobs Plan. We want to reinvest in America to keep those jobs here in America and to invest in our communities so we have a solid foundation for the continuing growth of the great American middle class and for the opportunity for lots of poor working people to get into the middle class. And with that, I will yield back to you, Mr. Chairman.
Thank you, gentlemen, for yielding back. The chair now recognizes Mr. Jordan for 5 minutes.
Thank you, Mr. Chair. Chairman Powell, the Fed has two mandates, right?
Maximum employment and stable prices.
Maximum employment and stable prices. It seems like both got some problems today. I want to spend a little time on the first. Why are the jobs numbers so bad right now?
Well, I think we're digging out of a very deep hole. We've made a lot of progress, but I would agree with you. We have a long way to go.
Over 9 million job openings. Over the past 2 months, only 800,000 jobs added back. That's pretty bad. Is there a specific reason you point to as why those numbers aren't where we would, frankly, hope they would be?
You know, it's a good question, my thinking is that there are some temporary factors that are weighing on job creation, and I mentioned those earlier. Another thing is actual hiring is at very high levels, but it's being offset by high levels of quits and retirements. So the net, what's happening is that the net job creation has been lower, but actual hiring is high. And that's, in a sense, quits is a good thing because people are looking for jobs that they want more. Retirements are just something that happens.
What about unemployment benefits? Does that factor in as well?
It may be a factor, you know, and it'll be a temporary one because something like 15 million people will see either those benefits disappear or significantly decrease.
My understanding is the state unemployment plus the federal enhancements, $37,000 a year. Might that discourage people from going back to work?
You know, we're going to find out. We're going to find out because it's going to be gone really quickly.
I think we are finding out. You add in the stimulus package, child tax credit, family of four, it's about $110,000. I mean, every single employer, literally every single employer I talk to in our district, and frankly, employers I talk to around the country tell me they can't find people to work. And you think it's more of quitting and retirements, or is it more unemployment, or a combination, or what is it?
I think in terms of things that are weighing on people getting in the labor force, I think it's those three things I mentioned. It's still some people are still afraid of COVID. Maybe they're living with someone who's vulnerable. It's also schools are closed still, and having schools be open again will free up a lot of caretakers. I think unemployment benefits too. I think you would expect a really strong set of jobs numbers coming up beginning in the next month.
Didn't you expect higher numbers? Didn't you expect higher numbers in April and May?
Yeah, I did.
Which, I mean, it sort of surprised me. I guess when you pay people not to work, you shouldn't be surprised when you don't have workers. I've never seen a situation like this where we now have, as the ranking member mentioned, we now have several governors, 25 I believe, who've turned back. We said we don't want the federal enhancement to unemployment. I've never seen that. I've been in politics 26 years. I've never seen governors turn down federal money. So I think that just underscores how serious the problem is. But you said you think it changes soon?
Well, we know that these benefits run out on the federal ones.
What if the Democrats renew them, which they're talking about doing?
Excuse me?
What if the Democrats renew them? That'd be a problem, wouldn't it?
Again, I don't comment on
legislation. No, what you said you expect it to run out and that will help. I'm asking you, that's not what Democrats are saying. They're talking about renewing them. And if so, if it helps if they run out, if they renew them, won't that hurt?
Well, these are judgments for people who stand for
No, I'm just following your logic. You said if it runs out, that will help the employment situation. I mean, I got employers.
I think we'll see strong job creation in the fall. I really do, and I think there are all these, as you point out, 9.3 million job openings, many millions of people unemployed. There seems to be some kind of a speed limit. It may just be that it's hard to match up with a new job, and people feel like they can wait a little bit longer and really shop carefully.
It seems to me, Chairman, and again, I know you're not going to comment on policies, but I don't know if the Democrats are doing anything right. They kept the economy locked down. They're spending money like crazy, proposing more, I think a $6 trillion budget the White House is proposing, all causing inflation. Inflation's went up the last 4 months, continues to increase. As we said, you got two mandates at the Fed, stable employment, low inflation. We got unstable employment, we got high inflation. And now they're paying people not to work, and that may continue. And then finally, on top of all that, they're thinking about raising taxes. I mean, this is amazing to me. First, you pay people not to work, and then the folks who are working, you're going to raise their taxes, and somehow they think that's going to help our economy, when, as I said now a couple times, every single employer I talk to tells me they can't find people to work. What do you think about all these policy ideas from the Democrats?
Again, it's not my job.
No, but your job is stable employment and low inflation. Right now we have 9 million job openings and inflation that's went up 5 months in a row. So something has to give. I'm not necessarily blaming you. I'm blaming the Democrat policies. And it seems to me the idea that they're going to extend the federal enhancement makes absolutely no sense. The idea they're going to raise taxes on hardworking Americans makes absolutely no sense. And the idea they're going to spend $6 trillion also makes absolutely no sense. So as I said, it seems to me they are doing everything wrong, making your job that much harder. With that, Mr. Chairman, I yield back.
It's a good thing, too. With
I don't give comments when you make your statements. Tell me what I said wrong in that statement.
It's a good thing that you're yielding back so I can give 5 minutes to Mr. Foster.
It's a good thing I made those points about how bad the Democrat policies are. That's the good thing. And we'd like to answer, it'd be nice if the Fed chairman would answer the fact that if you guys extend unemployment, which he said if it goes away will be good for the economy, and if you extend it, he wouldn't answer that question.
With that, I yield 5 minutes to Mr. Foster.
Thank you, and I sympathize with the chairman sort of being left speechless by the logic that we just saw demonstrated. I'd also like to respond to some of my Republican colleagues about the origin of the coronavirus. The Science Committee Investigations and Oversight Subcommittee that I chair is in fact having a hearings on the origin of the coronavirus. The first is scheduled July 14th at 11 a.m. These hearings are going to be science-based, and I think it says a lot about how seriously my Republican colleagues take science that they cannot even find a complete set of members to serve on that committee, on that science subcommittee. They have only 2 members, the ranking member and Representative Sessions. With that out of the way, I just want to thank you, Chairman Powell, for your testimony. You correctly note the importance of the successful vaccination campaign. Under the Biden administration's leadership, we've now administered over 300 million vaccine doses, and COVID infections have fallen dramatically. The CDC has advised that vaccinated people can safely engage in a wide variety of activities, and states have been able to do that and ease coronavirus health restrictions. And when they do that, our economy recovers. I think it's clear to everyone that the return on our investment on vaccines, starting with money and directions provided by Congress before Operation Warp Speed was even announced, and following decades of federally funded research into the underlying science, has had the highest return on investment of really any that our country has ever made. Would you agree with that?
I don't have a number to put on that, but yes, I would think the return on investment would be high.
But the return on investment is not limited to vaccinating the United States. We also benefit economically by helping vaccinate our trading partners. Would you also agree that the return on that investment is likely to be very high?
I would, yes.
Yes, and would you be willing to have some of your brilliant economists that work for you actually try to put a rough number on that? Because it's an important thing for us to appreciate as we decide how much of resources to devote to helping our other nations around the world.
I will be glad to do that.
Thank you. And now, with COVID, our economy has experienced a number of inflation shocks. The tight labor markets, commodity shortages, release of pent-up consumer demand, chip shortages, as you mentioned, due to underinvestment in foundries and overinvestment in Bitcoin and meme stocks. Proposals to move onshore the supply chains that have historically been offshore, which will, in general, increase prices. And all of this, however, happens against a continuing backdrop of long-term technological job loss that was arguably accelerated by COVID. So how do you think this is all going to net out when the transients are over, the longer-term, say medium-term effect of inflation?
I mean, it's incredibly hard to say, really. If you're positing an actual reversal of globalization, that could have implications, as you suggest. But I wonder if that's really going to happen because of policies that we adopt. You know, the technology goes instantly around the world. It's not going to be easy to stop that. The economy's become very globalized. And also, you know, production technology is so much more efficient than it was. You can do things, you know, with the new technologies, you can manufacture things here. That may or may not result in a lot of jobs in manufacturing, but you can certainly make things. There may be reshoring here that's actually quite efficient in terms of cost.
So the jobs will come back to the U.S., but they'll be taken by robots, sort of is here. Which,
there is some of that.
There's some of that, yeah.
In manufacturing, as you know.
Yeah, and so that's, so you're really maintain some uncertainty on how this is going to net out for the inflation.
A lot of uncertainty, yes.
Yeah, okay. Let's see, and my last thing, you know, you've been talking a little bit about high-speed broadband, which is, I think, an important investment with huge return. An important part of that is that when Americans get, for the first time, access to the Internet, that they're also provided a secure digital ID that prevents them from becoming victims to identity fraud and allows them to safely participate in our economy. One of your other projects you're working on, central bank digital currencies, is going to need to have a secure digital ID to allow people to transact in digital dollars in a safe way that can't be abused. And are you working internationally to try to get these secure digital IDs, you know, as part of your negotiations on central bank digital currencies and others?
I think it's part of the discussion. I would say we're not as far along as your description would suggest on that, but that's it's certainly something you would need to be able to have a.
Will it be addressed in your white paper coming out this summer?
A lot of things will be addressed. I'm not sure if that would be it. That's something you certainly need that to, down the road. We probably will be. We're just laying it out right now.
Yeah, no, it's important for our economic recovery as well as planning to respond to China, frankly, on central bank digital currencies. So move it up on your to-do list. Thanks much, and I yield back.
Thank you, gentlemen, for yielding back. My understanding is that Dr. Green has joined us. If so, he's now recognized for 5 minutes.
Can you hear me, Mr. Chairman?
We now hear you, yes.
Okay, thank you. Sorry about that. Thank you, Chairman Clyburn and Ranking Member Scalise, and I want to thank Chairman Powell for being here today. You know, last summer when the former Fed chairs, Bernanke and now Treasury Secretary Yellen, testified before this subcommittee, I expressed some concern that the excessive spending by Congress and money printing by the Fed might cause inflation. Mr. Bernanke denied this, saying that people said there'd be inflation in 2008, but they were wrong. Mr. Chairman, the numbers are in, and it looks like there's some inflation, at least the past couple of months, 4 and now 5%. When Congress spends trillions of dollars and the Fed prints money, something's got to give. You know, prosperity isn't created by government. I don't believe it's created by workers, by businesses, by entrepreneurs, creating and inventing, innovating. You know, I founded a healthcare company, grew that company up to over $200 million in annual revenue in just 8 years, and I have a little bit of experience on understanding how to create jobs, grow business, et cetera. And I genuinely believe those businesses out there are looking at this inflation as a tax. Now, it's a hidden tax, but they see it as a tax on their ability to B2B transactions with B2 customer. Every dollar the government spends has to come out of somebody's pocket, whether it's through another tax or a reduction in their purchasing power, it comes out. And if we don't get our fiscal house in order, I worry that that inflation won't be transitory, as I know you've said both in the press and probably here today, and I apologize for being a little bit late. But my first question, Chairman Powell, are you concerned from an economic and really a national security perspective about Russia and China dumping the dollar and their what appears to be a move to some kind of financial alliance between the two of them?
You know, that's not something that's really within our bailiwick or on our radar screen. You know, the dollar is the world's reserve currency. There really is no currency that's close to being able to compete. That's because of our democratic institutions and our record of maintaining low inflation, and because we have open capital markets and are great traders with the rest of the world. I don't see anything changing in that anytime soon.
Do you see the threat of raising the capital gains tax to 40% as a challenge to those capital markets?
And again, I really don't comment on tax and spending proposals. We don't have any authority over that. Whatever the level of capital gains tax is something that is the business of elected officials, not the business of the Fed.
I appreciate that. Over the past 10 years, the federal government's net interest costs have grown about 25% relative to GDP, despite the historically low interest rates. If spending remains on its current trajectory and interest rates reach their historic average of 5.7%, do you think the federal government will be able to pay its bills?
I have no question that the U.S. government will be able to pay its bills for the foreseeable future. There's no case in which that would not be the case. We have the strongest and largest and most flexible economy in the world. It's also true, though, that we're on an unsustainable path and that we're going to have to address that. And as I mentioned, the time to address that is when the economy is strong, unemployment is low, and economic activity is high.
Is it possible that the high interest rate that we're seeing today is the start of something that could be as bad as the 70s? And if not, could you explain why?
You say higher interest rates or higher inflation?
Inflation, I'm sorry, if I misspoke.
Very, very unlikely. What we're seeing now, we believe, is inflation in particular categories of goods and services that are being directly affected by this unique historical event that none of us has lived through before, called reopening the economy after closing it. So you see extremely strong demand for labor, for goods, for services, and you see the supply side caught a little bit flat-footed and trying to catch up. And you see bottlenecks and you see this all over the world, by the way. This is not just the United States. You see it everywhere, and it's very similar kinds of situations. And you have a central bank that's committed to price stability and has defined what price stability is and is strongly prepared to use its tools to keep us around 2% inflation. So all of those things suggest to me that an episode like what we saw in the 1970s, and I graduated from college in 1975. I had a front row seat. That nothing like that. I don't expect anything like that to happen.
Okay, Mr. Chairman, I can't see the clock. Unfortunately, I don't know if I have any more time.
You are out of time.
Okay, thank you, Mr. Chairman. I yield.
Thank you for yielding back. The chair now recognizes Mr. Christian Martha for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for appearing before us. Back in 2019, you said the following. You said, we try to create a strong labor market. For many, many people and many, many communities, that's enough. But for people who are at the margins, the low to moderate income community, that's not enough. They need a chance. And earlier that year, you said you were cutting rates in part to help those who are, quote, left behind. How do you see the impact of the pandemic on these groups of people for whom you expressed empathy and concern back in 2019? And how do you see the recovery affecting them?
Well, in the first instance, the pandemic hit the service industries very hard. Industries that involve dealing with the public, hotels, travel, entertainment. And the people in those customer-facing, public-facing jobs, they tend to be relatively low-paid jobs, and their minorities and women are significantly overrepresented among the people in those jobs. And that's who got laid off. Most of the layoffs, a big chunk of the layoffs, disproportionately, were in those industries. So it's clear this pandemic really hit those people hard. And why it was even more painful was that in the last couple of years of the very long expansion that ended in March of 2020, longest in our history, you really began to see benefits going more to those groups than to the high end. I mean, wage gains at the lower end of the income spectrum were bigger than they were at the higher end. That began to be the case in year 8, 9, 10, and the 11th year. And that was a very positive thing. And high labor force participation, the benefits of prosperity being spread widely, and it could have gone on for a long time, but for the pandemic. So we have the pandemic, and those industries are hiring people back. A whole lot of the job creation we're seeing is in those industries. You're still several million short in those industries of where employment was, but they're really high, very large numbers of job openings in a number of industries, including the service industry. So I really am hopeful with the strength of labor demand. It really is remarkably strong that over time, and not a lot of time, this will sort itself out, and we'll find ourselves in a very, very strong labor market with low unemployment, wages going up across the spectrum.
Can I jump in for one moment, which is, thank you for that answer. You were talking about the matching function that's happening right now between people who are perhaps dislocated and people who, the job openings that exist. What is your perspective on efforts by educational systems working with governments, state, local, federal, in upskilling people to match them with the jobs that currently exist in the post-pandemic economy through skills-based education or career technical education and the like?
I've been exposed to a number of programs of that nature, and they seem to work really well. Some of them do anyway. The idea being companies, you actually see it in South Carolina quite a bit. You see companies teaming up with schools and technical schools in these apprenticeship programs, and they really work. I would say that's a great idea, and it would be great to see more of it all over the country. But those things take time. They take policy support. They'll take time to really build and
Yes,
produce value. Whereas this is something we have the immediate need to get people back to work.
Yes, sir. Last question. What is the impact of other countries in the world not getting their populations vaccinated at the rate that we are, and the COVID fires continuing to rage over there? What is the impact on our economy? And if you have any metrics that can measure that, or that you'd be willing to share, I'd be very interested in that.
I don't have any metrics, but I will say and to Mr. Foster's earlier point, we're to the extent large countries around the world, large populations around the world not getting vaccinated, we're giving time and place for new strains, more virulent strains of the virus to develop and spread. Viruses do not respect national borders. And so I think it is very much in our interest to support broad vaccination around the world. It's also the right thing to do, but it clearly is the best thing for us as well, because no one is really safe until we're all safe.
Very good. Thank you so much for your service, sir.
I thank the gentleman for yielding back. The chair now recognizes the ranking member for a closing statement.
Thank you, Mr. Chairman. Appreciate the hearing. Chairman Powell, appreciate the work that you do. Obviously, some of the questions that we have, both Republican and Democrat members had, are more in the policy realm, which is not your purview. You have tools as the chairman of the Federal Reserve. You have mandates, as I know Mr. Jordan and you were talking about. But many of those tools are harsh tools that we don't want to have to get to if we don't have to. And I think that's really where we as policymakers need to step up and do a better job so that it doesn't fall in your lap. And I think those points were made clear. And if you look at just the two mandates of the Federal Reserve, maximum employment and stable prices, right now we don't have either. And it's because of policy decisions primarily by the Biden administration. Paying people not to work is causing real damage to our economy. You can't have 9 million openings for jobs right now at the same time that we're paying people on average $35,000 a year not to work, and then wonder why we have 9 million job openings. It's pretty clear. Every small business in America will tell you why. I hear the same thing across the board. They can't get all their workers to come back, and because of that, they can't open their business fully. Restaurants who are struggling, just scrapping and clawing to hold everything together, want to reopen fully, and many states are able to reopen fully, but they can't because they can't get all of their workers back. And it's not like they've gone on to other places. They know exactly what's happening. They're being paid more not to work than to work. That policy has to end. You even said it. When the benefits run out, it will help. Problem is, Democrats here in Congress don't want those benefits to end. And we're borrowing that money from our children and our grandchildren to keep people out of the workforce. It makes absolutely no sense. It undermines your very mandates. And again, it would push us to a place where you would have to use tools. And we don't want to see high interest rates. We don't want to see limits on monetary policy. But that's where it would go if we leave it up to other entities like the Federal Reserve. We need to confront this here in Congress. We can look at how states have done well and how states have done poorly. We don't have to reinvent this wheel. You could just look at a few of the states who've done it right. Georgia probably has the lowest unemployment, 4.5%. They were the first state to open. They took a lot of criticism, just like Florida, when they opened their economy early. Some said, oh, everybody's going to die. The only problem is, when you look at the states that stayed mostly closed, they were the states actually that had the higher COVID death rates. And right now, to this day, just looking at recent numbers on 7-day average of COVID, Georgia, 14 per 100,000 cases a day. New York, 36 per 100,000, almost triple Georgia. Georgia's fully open. New York is still mostly closed. Broadway's not even going to open until September. There's absolutely no reason for that. They should be open today. They could be open today. Schools should have been open months ago. All the scientists, we've had people sit in the very chair you're sitting in, including Dr. Fauci, say under oath, schools should have been open months ago. And actually, you're doing long-term damage to the kids by not reopening schools. This isn't something that the Federal Reserve Chair has anything to do with. It's policy. Policy of local governments that are hurting their economies and their people, and especially the children that are paying a big price. This is what's got to end. We need to focus on getting the economy fully reopened, on getting kids back in the classroom. And oh, while we're doing that, we surely ought to be addressing the origins of COVID-19. Not a month from now. Should have been months and months ago when we started calling for it, because nobody should have to sit here and go, why did it happen? Why did this calamity, deaths, destruction of economies, people's whole livelihoods going away, suicide rates, we didn't even talk about that today, suicide rates, drug overdoses, all off the charts because of what we went through in the last year, and yet not a single hearing in over a year on the origins of COVID-19. So hopefully we can get back to focusing on the very policies that will help us get through this the right way so that it doesn't end up in your lap and things end up having to be abruptly changed to the point where it actually harms real families even worse than they've already been harmed. Because as we've seen, so many things that are happening, like all of this inflation across the board, that shouldn't be happening right now. We shouldn't be seeing all this inflation that are brought on by President Biden's policies and his overreaction to something where the science, in fact, one of the things we've seen is a whole lot of political science being practiced instead of medical science. So hopefully we can get back to common sense and the science that shows us where we should be going, when instead we're seeing a whole lot of actions that are devastating to people when they shouldn't be going through some of this pain. So let's focus on getting things open the right way, following that science, and doing it, and again, not reinventing the wheel. Go look at the states that have done it right. Many states have gotten it right. Many states have gotten it wrong, and still to this day are doing it wrong. Let's not have the federal government continue to do it the wrong way by making things worse. With that, I would yield back, Mr. Chairman.
I thank the ranking member for yielding back. I want to close by thanking Chair Powell for his testimony today. We appreciate the opportunity to discuss the lessons learned from actions that the Fed took during the pandemic to support our economy, the Fed's current outlook as our economy recovers, and the action needed to ensure a strong, sustainable, and equitable economic future. Today's hearing has made clear that the Fed must improve its crisis response tools to ensure that communities, small businesses, and workers not just large corporations, receive support during emergencies. The Fed's pandemic relief efforts, while innovative and well-intentioned, were often too little too late and did not have the impact they could have had to bolster the economy. The Fed must learn from this experience to improve on these responses in future crises. The good news is that thanks to smart and bold economic policy by Congress and the Fed alike, our economy is recovering swiftly. The American Rescue Plan is delivering desperately needed relief that is supporting a broad-based economy or recovery. Since March, the economy has been adding an average of 540,000 jobs a month, and new unemployment insurance claims have dropped dramatically. Direct payments have eased Americans' financial concerns and have enabled them to support their local economies. Soon, the Department of the Treasury and the IRS will begin to deliver advance payments to families from the expanded child tax credit relief that experts project will cut child poverty nearly in half. As vital as the American Rescue Plan is, it must only be a first step toward a better economic future. The pandemic exposed significant faults in our economy, and we cannot be satisfied with a return to the pre-pandemic status quo. I noticed that our Chairman Waters has finally made it. I understand, and I'm glad you got here safely. And I don't think we ought to close this hearing without hearing from you.
Oh, well, thank you very much, Mr. Chairman. And I'm pleased I was able to get in, at the end of the hearing. But let me just say that, of course, I've worked with Chairman Powell for quite some time now, and I was so very pleased with the way that he worked, even with the treasurer during the pandemic, and of course now with Yellen, who is our treasurer, Secretary of the Treasury now. The two of them work very, very well together. And I was very pleased that at the beginning of this pandemic, they both said you have to go big, you have to think big. And that's quite unusual for a Fed chair who is usually more cautious and more careful about expenditures. Also, I'm very pleased at the way that he opened up and initiated so many facilities. Some of them I still don't understand, but I do know that there was every attempt to be able to meet the needs of the business community. With the Main Street facility, I was very pleased that after opening that up and getting the information out from that, they modified some, and they brought in the opportunities for smaller businesses to have access to the Main Street facility. And so I compliment and thank Chairman Powell for not only his leadership during this pandemic, but his creativity and the way he was available to us to always help us think through what more can we do and how can we do it. So I'm pleased that I was able to at least come in on the end of this hearing today to say to Mr. Powell, I credit you along with others who worked so very hard to get us, past this pandemic and to get us back on the road so that our economy can do what we know it can do. And I've never really been worried about inflation, but I want to keep an eye on that, and I want you to keep us informed about what is happening in our economy. I think we're coming back, and we're going to come back strong. We've got to answer some questions about employment. We've got to find out what is happening with the need to increase the minimum wage, because I think that is what is keeping some of our people from wanting to come back to work. They're looking for better wages. They're looking for better opportunities. So with that, let me just say thank you, Mr. Chairman, and thank you, Chairman Powell.
I thank you, General Lee, and I'm sure Chairman Powell is very pleased that I did not close this meeting without your comments.
Thank you.
Let me continue to close by reminding, many of you may recall when we passed the CARES package, or as we were debating it, I said to at a meeting that I thought this would give us an opportunity to build an economy with the vision, with our vision. I was chastised for having said that, but I want to say once again, fulfilling the vision of this country, as we heard from Chair Powell today, is integral to our, what I call the pledge, as we close our Pledge of Allegiance with liberty and justice for all. That's the vision that all of us have for this great country. And that is why we are working hard to pass the American Jobs Plan and the American Families Plan, which will make the investments in our infrastructure and our families that are necessary to build back better. As we listen to the testimony today and the Q&A, we're talking about why people are not going back to work. I've talked to a lot of people in my state that will go back to work tomorrow if we could cure their child care problems. That's what we've got to do. We've got to make sure that this families plan is put in place so people's children will not be endangered when they go back to work. So, Chair Powell, I thank you so much for testifying today. The Fed continues to play a critical role in helping our nation recover from the coronavirus crisis and in ensuring an equitable recovery. I trust that you will never lose sight of the fact that millions of Americans are dependent on the Fed continuing to support the economy's recovery. With that, and without objections, all members will have 5 legislative days within which to submit additional written testimony for the witness to the chair, which will be forwarded to the witness for his response. This hearing is adjourned.